Focus. Ideate. Innovate. Enable.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Well, it's commonly said that you must say what you get if you wish to be rich. I mean, think about it. Anyone can earn money, but it takes a wise man to save and take advantage of it. Hello and welcome to the Mutual Fund Day Family Financial Plan series, a show that helps you chart the best path to attaining all your financial goals. Each episode, we feature a different investor from a different part of India whose life has changed thanks to the right financial planning. This episode is no different. We're featuring Sunil Tambe from the city of Pune. So let's start with a quick look at his financial profile.
In today's episode, we will be looking at the financial planning journey of Mr. and Mrs. Tambe from Pune. Mr. Sunil Tambe is the Managing Director of Balaji Tambe Healthcare Private Limited, a reputed business of Ayurvedic products.
The real investment, what I would say, actually started between 1996 and 1998. And the journey has continued till today. It has been completely varied from time to time. So initially we were investing more into equity and direct shares and so on, and which created a lot of stress and tension actually at that point of time. So then we wanted to migrate to a better option, and slowly we found different options in mutual funds. So that is where we migrated slowly as on today. Our investment is not only in mutual funds. We have a lot of investment in real estate, in gold, in bank FDs and so on also.
His wife, Dr. Malvika Tambe, is a well-known Ayurveda health professional who heads Santulan Ayurveda as a managing director. They share a beautiful home in Pune with their daughters Tanushi, Tanishka and Sushmita, who are in 11th, 9th and 4th grades respectively.
So the short-term goals are basically we need all the time funds to expand our business and some unforeseen expenses which might crop up in the business. So that is one short-term goal.
Since I have 3 kids, they are studying hard, so they want to have leisure holidays, maybe in India, maybe abroad. So for that also we need to have financial proper management. And other than that, naturally I have to think about their education also, because all 3 of them, they would like to have higher education afterwards. So we are thinking about it, how to get these financial investments done slowly and surely.
Sunil started investing in 1998 and looks after all family investments. His portfolio is very diverse and includes mutual funds, bank FD, equity, gold and real estate.
When I got married, I was very young. I was very naive about the finances and investments. Then I slowly started taking interest in the business. Then my husband supported me, how the finances are working. Then I also had few sessions with our finance supporters, Sajak, who are taking care of our investments, and they also explained me a lot about the investment things.
In the long term, naturally, one thing is that our business should grow beyond our boundaries where we are today. So for that, naturally, a lot of investment is needed over a long period of time. So that is one focus area. The second thing is the post-graduation education of my daughters and eventually their marriage. So that is one area where my wife is also very concerned about. And thirdly, it is the retirement plan. So I think we are looking at it from the point of view of still 15 years down the line, where we would need a proper corpus in hand so that we can happily retire and enjoy.
All right, now that we have a broad understanding of Sunil's financial profile, let's take a short break. On the other side, we'll be decoding Sunil's balance sheet. And for that, we are joined by Prasad Pradhan, an independent financial planner. Stay tuned to CNBC TV 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back to the Mutual Fund Day Family Financial Plan series. In the previous segment, we got a brief look at Sunil's investment journey, his financial planning journey. In this segment, we'll be joined by Prasad Pradhan, an independent financial planner who will be decoding Sunil's balance sheet, of course, and giving his insights on money management. So let's kick things off with Sunil. Sunil, outline your portfolio that you have, the financial portfolio that you have. Where have you invested?
So I think it would be around 50% in real estate,
Okay.
5% in gold, 5% also in equity, and then we would have around 10% in bank FDs.
Okay.
And then naturally a fair bit, around 30%, 25 to 30% in mutual equity.
Okay, 50% in property. Prasad, how would you react to that? What would be your first prognosis be of Sunil's financial investments?
Basically, if you see, their business is dependent on the property, because they have to invest in property because their business is such. Without property, they cannot grow. So that is a basic necessity for them also.
Let's talk about the journey there. As in, when you started investing, I guess, in 95. So how would you characterize your risk profile then versus your risk profile now? Because typically when people start out, their risk profile is conservative. Once they get a bit of confidence, then they're okay with taking more risk when it comes to investing in financial instruments. What's your story there?
Right, it was not actually like that. It was exactly reverse. We are basically a conservative family. So we have not been into too much investing and sort of thing. We have been into hardcore hard work, right? So for the gains. So, but what happened in 1996-98? So this is the first time we invested in equities directly. So at that point of time, we thought of equities as the right instrument for investment. Only it gave a lot of stress because you had to monitor those, and every fluctuation gave you tension and stress. So which we thought that which was meaningless. And then in 2000 came the dot-com crash, which burst a lot of bubbles around us. And then we changed tack, and then we started planning much more properly and efficiently towards our the whole journey of the investment. And then we turned towards mutual fund at that point of time actually.
Prasad, managing expectations is a big part of your job profile, and especially at a time when markets are at a high and people begin to wonder, is there a correction coming? Then there is a bit of uncertainty in their mindset. So how do you manage that expectation?
It is always difficult to handle human behavior, and that plays a major role in this market. We always say there is a fear and greed. Emotions should not play, but that happens. One of my clients has invested 40 lakh rupees just one day before demonetization, and after that market came down and his value was around 37 lakhs. So he was very worried and was asking me what will happen. So when he invested the money, I asked him, this money is there for 5 years? He said, yes, this money is there for 5 years. So I just told him, don't worry, you will get good returns if you hold on for 5 years.
Now, let's take Sunil's case. What is his investment in terms of funds? What's the mix in terms of funds that he has?
He has mixed. He has liquid funds, he has arbitrage funds,
Okay.
he has balance funds, and equity funds also.
Was arbitrage funds for tax efficiency that was put in?
It's like a parking money in arbitrage funds. It's a parking.
So, Prasad, how did you take that call? How did you arrive at that conclusion that Sunil's money is spread over too many funds? And I'm asking you that question so that viewers at home could also get an understanding of how to know when you've invested in or rather over-diversified in terms of your investment. What would you say to that?
First thing is that it should be manageable. If it is diversified, then it becomes difficult to manage.
Okay.
So if you're having limited funds, it becomes easy for a financial planner also and for an investor also. And then returns are the most important things.
Okay.
Yeah.
Okay. And there are a whole lot of options. Speaking of choice, on the flip side, if you look at it, the mutual fund investment universe has so many choices. So where does someone who's starting on this journey actually begin to, start investing? Where should be their starting point in your opinion?
Whenever they start earning, they should start investing.
Okay.
Start early is a key mantra, basically. So they can start with SIP. Nominal amounts can do wonder that we have seen in mutual fund industry.
All right, we've got lots of points discussed in this segment, but we'll need to take a short break right now. But when we return, lots more on money management and, of course, insights and stories coming forth. Stay tuned to CNBC TV 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. We are on the final leg of the Mutual Fund A Family Financial Plan series, and this episode we are profiling Sunil, and of course Prasad is here to give his expert insights. So let's dive right back in. Sunil, give us an idea of your long-term goals for which you are planning your investments around.
So one of the long-term goals is naturally the graduation of my daughters, right? So their education after graduation also. And for that, I have invested into SIPs since a long time, actually. I think 10, 12 years already since they were born. I think immediately in 3 months' time, we did start an SIP on each one's name. And that is one long-term goal. The second long-term goal is actually business expansion. So, you know, any business, if it doesn't expand, it starts contracting, so to say. So we don't want to become stagnant. So that is one huge aspect which is playing on our mind, that we need investments that can promote our growth. And at one point of time, even when we invested in mutual funds or the equity, the whole idea was that we are invested in the company or the market in a fashion that we are promoting national growth. So it's not just about our growth or our funds increasing, but also that the nation progresses together because of the wealth that you invest into the market.
That's a good.
So the same thing applies to us. So we would like that our funds also add to our growth, our business growth in the future.
Okay.
So we would like to have many more Ayurveda centers as we have today. So that is one long-term goal which we have. Then the third is naturally, you know, as I age, then and come to retirement, then I would like to have a proper corpus in hand. Also, at that point of time, I think the marriages of my daughters will be coming up.
All right.
Which makes my wife a little bit nervous at times. So, not nervous, but she thinks about that naturally as a woman.
You have to plan for it.
Yeah, you have to plan for it. So,
all right.
That is one long-term goal that also we are planning on.
All right. So, 3 goals which Sunil has mentioned. So, let's start with the first one, which is the education fund for his children. How did you strategize creating that, you know, sort of a reserve for Sunil to dip into to fund the education for his kids? The advantage he had, I guess, was he started early.
That's right.
That was the starting point there. What would you say to folks watching at home as to how to go about creating an education fund? Because that's a concern which a lot of people will obviously have. So what do you have to say about that?
Whenever a child takes birth, I always say you should start his SIP immediately. Then only you can get good returns and you can fund his education properly. And nominal amounts, people have started SIP of 5,000 or 10,000 15 years back or 17 years back. And now their children are going to the colleges or for post-graduation study. They don't have to bother for loan or something like that. From that money, they can send their child wherever they want.
Now, when it comes to business expansion, there is always a need for creating an emergency reserve fund. So, how should folks go about creating an emergency fund? What are the points they should look at, you know, when they strategize on creating an emergency fund?
Yeah. Emergency fund should not depend on the market, because market is always a volatile thing. And that should be parked in such a place that they can liquidate it very easily. The returns will be little lesser, but they should not have any tension that my money is fluctuating.
But how do you create an emergency fund which, say, at least beats inflation, where its value is not eroded?
Right. So some part we always keep in liquid fund or arbitrage fund for emergency purpose. If the money is there for more than 3 years, then we say invest in balance funds. If money is more than 5 years, we generally advise them to invest in equity funds.
Okay, and now let's come to the third long-term goal which you mentioned, which is planning for the kids' wedding. How do you, what would you say to parents who have to do that, who have to plan to do that? How should they go about doing their financial planning for that?
I will always say that there should be one SIP for education, another for marriage.
Okay.
If they keep these two SIPs from the birth, they will not worry at all.
All right. Let's talk about where Sunil's portfolio is right now, and what are the probable corrections that we could look at in the way ahead right now. Is say corporate bond funds probably on your in your eye to make a correction in his portfolio? What are some of the options that you're considering?
Asset allocation is very important. Market is always volatile. And if market goes ahead of time, then we have to liquidate some of his equity funds, and then we can shift to some bonds or government securities or some corporate bond funds.
Okay. And in terms of tax efficiency, what would your advice to Sunil and other viewers watching would be in terms of their investments and, of course, gaining tax efficiency out of that? What's the starting point? What are the best options for them?
Right. If you keep money in bank FD, you have to pay 30% or 20% tax as per your slab.
Yeah.
Yeah. If you invest in mutual funds, basically debt funds, and if you keep money for 3 years, then you get advantage of indexation. And after indexation, it is taxed. So you have to pay nominal tax.
Okay. And what about benefits of indexation when it comes to, saving your taxes on debt fund gains? What would you say to that?
Right. Basically, if you invest for 3 years, as per tax rules, then you get advantage of indexation. So every year it is indexed. So you get benefit of that after 3 years. So you don't have to pay on the additional indexation cost. So suppose somebody has invested 100 rupees today, and that becomes 125 after 3 years. Because of indexation, it will come around somewhere 123 or 124. So he will have to just pay tax on 1 or 2 rupees on that. So it will be nominal.
Let's come to the aspect of your retirement. So what are your plans regarding your retirement funds? Have you set targets? Have you started front loading a lot of the investment so that, by the time you hit 50 or something, a lot of the investment or a lot of the money required has already been put in, so you can be on a sort of a coasting phase? What's your retirement fund plan?
So I'm not looking at 50, but I'm looking at 60 as a age where I would think of a retirement fund. And what we have been doing is actually we have been investing lump sum amounts into mutual equity in between, just for this case that the portfolio really builds up well. So I don't want that, just now I'll be miserly in investing for the future and find out at the age of 60 that it may not be entirely enough, because at the rate of inflation where we are going, things are exploding sometimes out of control in terms of prices. So I would definitely like that I have a fair amount of money which would come into the retirement fund.
Okay. And what's a good investment vehicle when people are thinking about retirement fund planning? What are some of the good investment vehicles they should be looking at? ELSS, a few other options. Could you list out the options for our viewers and the benefits associated with each option?
Right. ELSS is the first option.
Okay.
Then second is balance funds. It can be a second good option, because there they have debt and equity combination of both, and the returns are tax free. And third, if the goals are long term, then pure equity funds also make sense, because over the period we had seen equity funds had given phenomenal returns.
Now you've had a close to a decade investment journey, so I'm sure there must have been a lot of ups and downs. So what are some of the key lessons that you learned, Sunil, from this investment journey of 10 years?
The key lesson that I learned is that we should start early, which fortunately I did at that point of time. And the second thing is that we shouldn't look too short term and stress ourselves with everyday fluctuations of the market. That makes absolutely no sense. If you want your peace of mind, you should invest in things that run a long term race, not a very short term race. So then you don't have to continuously look and keep a watch on your portfolio. So that I think would be the most important thing, because you want to enjoy your life and concentrate on your family and your business. You don't want to continuously just concentrate on a portfolio.
All right. And Prasad, what would you say to our viewers who say they have not started on their investment journey yet? What would you say to them in terms of encouraging them and also to think about it in a way that they haven't thought about it before?
They should always look at these instruments they should always go to a right financial advisor.
All right. On that note, we'll conclude this episode of the Mutual Fund Day Family Financial Plan series. A big thank you to both Sunil and Prasad for sharing with us their stories and, of course, their insights on the topic of money management. And thank you to our viewers for tuning in. We'll be back with another episode, another financial planning journey. Stay tuned to CNBC TV 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Focus. Ideate. Innovate. Enable.